Hello everyone, it's Wednesday, April 9, and today we will take a closer look at the euro and the British pound charts to assess potential market shifts. On Tuesday, sellers attempted to push the euro below its April 7 low, but the single currency handled the pressure, buoyed by rising expectations of a US recession. Analysts are warning that US President Donald Trump's sweeping tariffs on all countries without exemptions, which are set to take effect today, could spark a new, full-blown trade war. While many countries, including Eurozone members and the UK, are scrambling to secure tariff agreements or reach compromises with Washington, China is taking a hardline stance. As a reminder, the White House has slapped a staggering 104% tariff on Chinese imports. With Beijing moving to fight to the end, tensions remain high, fueling volatility across equity market and waning on the US dollar. Amid this backdrop, currency traders are increasingly favoring long positions in the euro, the pound, and the Japanese yen. The dollar may remain under pressure today as well. For market participants, attention now turns to fresh commentary out of Washington, as well as updates from China, the EU, the UK, and other key US trading partners on the state of negotiations. Let's turn to today's macroeconomic calendar, which is notably light on major data releases. Traders may take note of the minutes from the latest meeting of the Bank of England's Financial Policy Committee. The Federal Reserve will also publish minutes from its most recent policy gathering. However, the Fed report is unlikely to significantly move the currency market as the US regulator is now reacting to real-time developments, chiefly incoming economic data and the evolving trade policies of President Donald Trump. With the latest round of US tariffs now in effect, the Fed's current stance likely diverges from the outlook reflected in its last meeting. In the absence of meaningful data, the euro and British pound could continue their recovery, building on recent gains and potentially reversing the prior bearish movement. Turning to the technical analysis, the 1-hour EUR USD chart shows that false breakouts at 1.1086 and 1143 could provide opportunities to sell the pair. Going short on the rebound would be relevant at 1.1179, targeting an intraday correction of 35-40 pips. On the flip side, a decline followed by a false breakout at 1.0991 and 0942 would trigger a buy signal. Long positions on rebound should be considered at 1.0894 with the same 35-40 pip correction in view. Speaking of the British pound, there is currently a battle unfolding around the 28.42 level. A false breakout at this mark would generate a sell signal, dragging sterling down to 1.2779, the middle of the current sideways range. If the price breaks through and fixes below this level, the pair could extend its decline towards 1.2711, potentially reaching 26.79. At this level, I would recommend going long on a rebound, targeting a 35-40 pip move. Long positions at 1.2779 and 27.11 should be considered only after a confirmed false breakout. In a bull case scenario, a break above 28.42 could pave the way for a move toward 28.87 and potentially up to 1.2929. At this mark, it would be wise to go short on the rebound, aiming for an intraday correction of 35-40 pips. Going short at 1.2887 and 28.42 would only be relevant in the event of a false breakout. Good luck to all.